Gold is soaring as investors weigh Fed independence, rate cut bets, unsustainable debt, as well as geopolitics that are reshaping markets right around the world. For more, let's bring in David Scutt from StoneX. Good to see you, sir. Why has gold suddenly become such a focal point for investors, or do we just need to have a look at that Chinese military parade to wonder why?
G'day, Aaron. Great to be back. Look, that's probably part of the reason, but as you mentioned, some of those factors at the top, there's no one single factor, but there's a lot of positives working for gold right now and not a lot of negatives, and it's really been shown in the recent price action.
Yes, talk to us about the price action.
Yeah, look, wasn't that long ago that we were talking about gold potentially going and hitting 3,000 an ounce, even 2,500 an ounce, less than 2 years ago. And then this week it's gone and surpassed 3,500. Now, that's had a big impact. And one of the factors behind that is on the screen right now. What we're looking at here is 30-year real yields. So basically, what's happening from one source is that government deficits and government debt levels are growing very, very quickly. And no longer is government debt being deemed by the investment community as being entirely risk-free. So what that's showing there is that the cost basically demanded by traders to go and fund governments, in this case the United States, continues to go and increase over a 30-year period. So that's a factor as well, because of course gold is a safe haven. The fact that we don't have those treasuries now acting like a safe haven is one of those big fillets that's really helping to propel the gold price higher.
Which I guess means that there are serious concerns about the Fed's independence at the moment on top of all of this.
There is, and the latest jackknife higher in the price, which has really come over the past couple of weeks or so, started on the day when Donald Trump first got to Truth Social and then flagged that Lisa Cook, the current Fed governor that we spoke about on the program last week, needed to go and resign. Of course, he's gone and looked to go and remove her now, and it's now in the courts to decide what is actually going to take place. But from that moment on, we're seeing the gold price up now over 7%. So I think it's telling, it's not a coincidence. It's one of the factors that's behind it, because there is concerns out there that the Fed is going to be acting on political means rather than economic means, and they're going to cut rates regardless. And look, here's another factor as well. This chart here just looks at debt levels, 30-year yields around the developed world, the G7 nations. And you can see this year, with the exception of the United States, almost every single other nation has seen those 30-year yields pushing higher. So again, it's not just treasuries, it's debt around the developed world that markets are starting to sour on.
So talk to us about, I guess, the role about the weaker US dollar. What's it playing in the gold rally?
Well, anyone who's followed gold for a period of time would know that traditional drivers are A, the US dollar, because of course it's priced in US dollar terms, and we know this year the US dollar has been sinking quite dramatically. But then when you go and look what's been going on with interest rates as well, while longer term interest rates are pushing high generally, when you look at what's going on at the short end of the yield curve, basically that's influenced by rate cut pricing for central banks, it's been coming lower. And that generally goes and helps gold because, of course, it doesn't have a yield. It's basically just an asset that you hold. And the fact that you've got lower yields at the front end of the curve and a weaker dollar is another one of those factors that's helping to go and push the gold price ever higher.
Let's talk about the markets at the moment. Are they betting too heavily on Fed rate cuts this year? We'd been told that there'd be 4. How's it looking now?
Look, over the next 10 months or so out to June next year, the market's still pricing 100 basis points of cuts, so 4 25-point moves. Look, honestly, I think it's right that markets are saying that the rates are going to be cut, but just the factor is, what's it going to be the reason behind it? Is it going to be because of political persuasion, or is it going to be because of economic factors? And right now, the markets are trying to go and figure that out at this point in time. So we'll see what happens when it comes. We've got ADP employment report out tonight, and then of course non-farm payrolls on Friday. Last month, of course, the payrolls report was very weak, and that's what really stoked all this concern about the labour market and this big increase in rate cut pricing we've seen from the Fed.
Just quickly, are banks losing credibility here, do you think, fighting inflation, central banks?
I think so. It's pretty clear that when you look around the developed world, that almost every single central bank is preferencing growth over inflation. Anything that suggests that inflation might go and become sticky and above target is kind of dismissed as being temporary. But then when it comes to growth, very quick to act and cut rates. And when you look at what's going on with inflation expectations over the course of time in the United States and other parts of the world, almost nowhere are we seeing inflation expectations actually at the central bank target. They're all sitting above. So I just suggest that when it comes to priorities, it means that they're going to prioritize growth over inflation. In an inflationary environment, it helps hard assets like gold.
All right, that's gold. David Scutt, appreciate your time. Thank you.
Great to be here.